The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the February WASDE report was released on Tuesday, and we expected it to be a fairly uneventful one, and that was pretty much the case. A few minor tweaks here and there, mainly on the global balance sheet, seemed to be where we saw a few adjustments on the WASDE for February. Let's take a look at things and get some perspective from Corey Bratlin with agmarket.net. Corey, good to have you back with us on the show. And man, Tuesday, kind of an uneventful day. And as I alluded to, we kind of expected that February WASDE is typically not a big market mover, is it, Corey?
No, it's really not, Jesse, and glad to be here again today with you. Overall, yeah, this was a non-event. The USDA pretty much just punted it down to next month. We'll see if we get some changes in the March report. I will say the couple takeaways I did have is we finally did see the USDA start to adjust the South America crop, mainly the Argentina soybean crop, down a little bit. Many analysts have been talking about this for the last 2, 3, maybe 4 months here in the marketplace. And we're finally starting to see that here currently in this month's report. So that was kind of where the change was. Not a surprise, though. So it was, like I say, the market is just kind of didn't get anything major surprise. So the market is starting to kind of grind itself a little bit lower here now because we didn't feed it some bullish information.
You know, you mentioned the Argentine numbers and expected to see those cuts there, maybe a little deeper on their soybeans than some had thought. On Brazil, though, I found it interesting. They slightly cut corn, but they did not make any changes to Brazil's soybeans, despite, I know we've been seeing some battles of heavy rain in central Brazil, et cetera. Did that one surprise you that they made no adjustments to Brazil beans?
Well, they're getting into harvest right now, so I think they're far enough into harvest, 20 or so % harvested. I'm estimating here. And so far, the northern part of Brazil, far northern, was been very wet. They have been getting their harvest done, a little bit of delay. The big state, Mato Grosso, what we have been hearing is the yields have been coming out just phenomenal and probably going to offset some of those lower yields that we're going to see in far southern Brazil that gets a little closer to Argentina. So, yeah, for them to just leave it unchanged at 169, there is a general feel, though, that crop still could get a little bit bigger. They are getting some rains in Mato Grosso. However, what I'm seeing and hearing is that these are rains at night. They're still not affecting them to harvest during the day. So harvest is progressing along. They're getting the safrinha corn crop planted on about the 5-year average, not as fast as what it was last year, but we're on about the 5-year average pace currently.
All right, as you look across the rest of the numbers on Tuesday's report, U.S. numbers or other global numbers, again, didn't see many changes. Anything else stand out to you on the grain side?
Well, what I'm looking at is this world carryout on corn, down another 3.5, a little over 3 million metric ton. We cut 1 million metric ton crop out of Argentina. USDA cut 1 million metric ton out of Brazil, but they lowered the global ending stocks on corn by 3 million metric tons. So what that is suggesting to me that some of the other major world corn exporters like the Ukraine, their crop is they're getting a little bit tighter hands. The crop's getting a little smaller there, and as we know, that Black Sea region, Russia, Ukraine, they have some pretty hefty quotas, export quotas in place to where they're limiting how many bushels can get out. So it just puts more emphasis on that. The bulk of the rest of the global ending stocks are sitting here in our backyard. Number one. Number two is we are going to have a very nice crop next spring and summer to rebuild these supplies. This 290 million metric ton, this is on a stocks use ratio, Jesse. This is the lowest level we've seen in over 10 years now. So it's a little tighter than what we like to see out there.
Well, we look at Tuesday price action as we got into the close. It seemed like a little more pressure in old crop corn and soybeans versus new crop wheat, down roughly 2 to 4. Kind of a ho-hum day, but maybe starting to see some of that spread action between old and new crop corn and beans. What do you think, Corey?
Yeah, we are. We didn't feed the bull or feed this market enough bullish information by cutting the U.S. global U.S. ending stocks. They were looking for a minor reduction there. We did not get that. So now the market is like, okay, we didn't get anything bullish, so or a little friendly, so now we're going to pull back. And it seems like with the funds already got their huge long position already built, we need to kind of feed them some friendly news. This isn't negative news by no means. I think I look for this market to trend sideways. Yeah, we're going to have our days where we pull back, but yeah, you're definitely seeing this old crop, new crop spread kind of narrow up here a little bit, and maybe not have as big an inverse in this. And that's because we didn't see the U.S. stocks drop. And they're with the global lending stocks at 290. There is emphasis that we do grow a large crop next year and to kind of rebuild those supplies. So yeah, rightfully so. This spread should start to narrow in here a little bit.
Corey Bratlin with agmarket.net joining us here today. And I'll kind of round this a little bit, but you think 470 D's corn, 1050 Nove beans, roughly. We've seen some farmers selling here the last several weeks, especially old crop corn, but then maybe even some new crop marketing as well. I just have to wonder if after a ho-hum report, if we start to feel a little more pressure this week, does that maybe drive some more farmer, positioning when it comes to new crop contracts? What do you think, Corey?
Yeah, the new crop, last year we had very few bushels were sold going into harvest. The commercial elevators had very little ownership. Now we went from here. Now when you look at the commercial position, it's huge. So that suggests to us that 70%, maybe 75% of this old crop corn and soybeans has been transferred from the farmer's hand to the commercial hand. Okay, so now as we're looking at new crop next year, we've seen this big rally, and it seems like every time we sell, the farmer's selling, the market keeps going up. And so I don't want the farmers to quit backing off on hedging in here. 470 was a big area. We got up into some resistance. Yeah, we do look for a little bit of a pullback. I think guys still need to manage their risk in here, make some sales, get some put options bought, get a floor in place, because 470 with a decent carry in the market of 15 cents out to March. It's at 11 today, but we're talking some profitable levels at trend line type yield for most of us. So we can't lose focus of that in this market environment.
I'll ask you a little bit about livestock. I know we got some fairly neutral to supportive numbers on the WASDE when it came to beef and pork, but you look at a cattle market, futures under more pressure again Tuesday. There's some worry that funds are maybe starting to liquidate some positions in cattle, whereas hogs found some decent support trying to bump up against some of this overhead resistance. So you take a look at the livestock sector, any notes from the WASDE when it came to the proteins? What's your take as you look at the livestock trade on Tuesday?
Yeah, Jesse, this livestock trade, I think, has a little bit more dealing with the headlines. I saw here late last night or yesterday afternoon that we did have a confirmed case of bird flu contracted by a human being that is working in a dairy, I believe it's in Nevada. So I think those kind of headlines is what's kind of making the funds a little bit nervous. As of last Tuesday and our commitment trades report, we are still looking at funds having a near record long position in live cattle and feeder cattle, and just a little bit off of record position on lean hogs. So I think there's just a little bit of that, maybe some taking some money off the table, maybe reallocating it in here. But overall, I mean, demand is still decent on beef and pork. Pork especially, we're starting to see that kind of pick back up a little bit. We, like you said, we're running into some resistance. We hit it yesterday on the April lean hogs. They backed off. Boy, we come right back and test it again. It's kind of like a glass ceiling. You keep hitting that, Jesse, 3, 4, 5 times. Eventually we're going to break it. So and that's going to be that old resistance will then become support. But I think cattle prices to beef prices or to pork prices probably need to level itself out a little bit more in here, and allow the consumer to maybe have a little bit of relief here. I'm all for beef prices, but a little bit of relief at the grocery store still wouldn't bother the overall demand on things.
Any final thoughts for folks? Anything you'd mention or reiterate here as we close out the segment today, Corey?
Yeah, just be prepared here. I mean, we're still going to have a lot of volatility. Watch these headlines here going into this spring. Manage your risk by all means. Okay, I think this is a kind of a trending market in here where corn is going to be in this $4.75 to $5 March level. I think March soybeans are going to be more in a maybe a 10.20 at the bottom side to about a 10.70 kind of upside kind of range. So I know manage your positions accordingly. New crop sales, we get these little bumps. Yes, well, don't get too crazy away, but having 20-30% sold at these levels is a very good thing to do.
I know folks can reach out for more, take a look at analysis and a lot of great resources online, agmarket.net. Corey Bratlin, thanks for joining us here on the show today. Always appreciated. We'll talk to you again soon.
Sounds good. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.